All right. So closing under 6,400 here, end of day, which is kind of interesting. Just slightly below or slightly above Vega neutral. I need to check that. I think slightly above Vega neutral with 63.95 acting as support. That puts us just above the market maker's expected move for the day, but still below gamma neutral going into tomorrow. Getting this level is probably fairly important. I think bulls will probably continue to push for like 64.32 to the upside. If this reversal fails, you'd confirm that on another failure of 64.01. So kind of closing the day in between support and resistance on ES with the reversal there and a failure there. If we fail, probably another low going into tomorrow. And it's very possible that bears just simply repositioned on this bounce, especially if we get a lower high. And, that might mean a new low tomorrow. So we'll see how positioning shakes out a little later. I'll put it in pickles picks. Yields at the top end of the curve drifting down again today. The slight drop in the dollar. Dollar lost some ground against the yen and the pound, but gained a little on the euro. Correlation looks like it started to break back down into the end of the day a little bit after about 2:30 and continued to move down on the 1 month into close. 3-month correlation stayed pretty flat into the end of the day. But I mean, this still looks like correlation is reversing and pulling back the dispersion trade. Commodities bumped a little bit today. Moves in precious metals, gold, oil, all fairly significant. Probably a good sign. I'd say some of that moving on the back of the potential for the Fed to maintain rates. 3-month correlation moving up, but bond volatility is still fairly low. We're not seeing a lot of significant activity in regards to bond volatility. But as 3-month correlation starts to move up or that spread widens, it's very possible that we'll start to see bond volatility pick up as well. Forward yield on volatility moving up again today, but still negative, which is interesting, given where the market's positioned. The forward yield on vol is remaining so low. VIX and VIX 3-month both up today. But leverage at the short end of the carry trade staying fairly suppressed. Leverage at the top end is still up, but fell a little bit today. Out of the money put demand shrank a little yesterday, but barely noticeable. And 20-day decliners continued to drop off, but the 200 stocks over their 200-day moving average are fairly stable. And we do see a little bit of a breakdown in correlation today after 4 consecutive days of increasing correlation. So probably a little extra shortfall today. Actually, it definitely was. So we'll see what that translates into going into tomorrow. The only significant data we have tomorrow is going to be probably the S&P PMIs and maybe Philly Fed. Both of those are, one's in the pre-market, the other's going to be just after market open. But I would say if we're seeing services contraction, that may not necessarily be bearish because they're going to price in more rate cut potential on the back of a weaker services print, unless it's very weak, in which case that could be bad. Also, the price index is going to matter because the focus on inflation is going to be pertinent. Fed fund futures moved up on the June, or the March and the June, but actually fell a little for January, down to 0.38. That's not really that significant, I don't think, but that was on the back of the FOMC minutes. So pricing a little less likelihood of a near-term rate cut. The bear steepener contracting a little, 10-2 year, just pulling back a little bit. Nothing to write home about there either. On the technical side of things, we bounced off the 30 EMA, which we noted was our kind of almost right off of it, which we noted was our fairly important downside test. We did leave a gap at 63.39 unfilled to the downside. However, if tomorrow doesn't maintain this bullish path and push back up to 64.27, which would be a retest, and still also not bullish. But and we opened down from where we closed. Continuation to go down and fill that gap and drop under the 38 EMA is very likely. If we open above 6,400, I would say that bulls will probably try to push out for 64.27 before end of day. That would be the break point, at least going into market open tomorrow. And then if bulls get above that, there's some negative delta out there they could squeeze off and get the rest of the reversal in before Powell starts speaking, which will give us about mean reversion over the last several days at like 64.50. And that's about it, I think. Yeah. So I will see you guys bright and early tomorrow. We'll see how this turns out. Tomorrow should be fairly boring, but if gamma stays low on tomorrow's expiry, it might get a little spicier. Later, guys.